Hey everyone, Love Joe from Market Makers University here, and in today's video, I'm going to be showing you, in my opinion, the best and simplest Forex trading strategy for beginners. So for those of you who are brand new that are looking for a strategy, or for those of you that might already have a strategy that are just looking to become profitable, you've landed on the right video. I'm going to be showing you a step-by-step rules-based approach to give yourself an edge when it comes to the markets. And what do I mean by edge? What I mean is being able to create yourself a strategy that gives you a positive expectancy over a series of many trades. So for example, if you take a sample size of, let's say, 20 trades, or 40 trades, or 100 trades, you'll know at the end of that sample size, you'll always be coming out with a profit. And once you can create yourself a strategy that gives you a profitable expectancy, a positive expectancy, you'll know at that point you can essentially print money for the rest of your life. And at that point, the only thing you will need to do is just feed more money into your system, into your strategy, because you'll know every dollar that you put in, you'll get extra money coming out. If you put more dollars into your trading strategy, you'll get more money out. So the longer that you continue to trade the strategy, the bigger and bigger and bigger your account will grow. And I'm not saying that you're going to become a millionaire overnight. That's not what happens when you trade with a real rules-based approach. What I do mean is if you consistently follow this rules-based approach, your account will slowly grow and grow and grow and grow and grow, and one day get to a point where your trading could potentially replace the amount of income that you make with your traditional 9-to-5 job. However, there is a caveat. Just like with any strategy, this strategy also requires discipline and patience. And those are the two things that many traders struggle with. So if you can overcome those two obstacles or barriers, you're going to have a lot better chance of becoming profitable following pretty much any strategy. And the good news is, with this strategy that I'm going to share with you today, it's a very simple rules-based approach that will give you not only a positive expectancy, but also it'll allow you to build yourself that discipline, and it'll allow you to build yourself that patience, because those two things are the biggest downfalls that traders generally have. So if you guys are ready to learn this strategy, I want you guys to let me know by hitting the like button on this video, because that lets me know that this content is valuable for you guys. So if you guys are ready, go ahead and drop a like and let's roll the intro. So in this strategy that I'm going to teach you today, you're going to be learning and mastering a few key things. So this is what's called a trend continuation strategy. And what do I mean by this? And what I mean is you're going to be looking to enter trades in the same direction that the trend is already going in. You guys might have heard of the phrase that says the trend is your friend. And the reason why this phrase even exists is because if you're trading with the trend, you're more likely to be able to be on the correct side or the accurate side of the trade when it comes to trading these markets. Now, in my previous video, in the video that I released last week, we talked all about trends, right? We talked about everything you need to know in order to understand which direction that the trend might be actually going. So if you haven't watched that last video, the video where I talked about the fundamental analysis and how we understand what's going on in the countries and the economies around us, I would definitely suggest you go ahead and watch that video first before you continue to watch this video. And I'll link it right up here so you can watch that video as well. Now, once you have a basic understanding of the direction that the trend might be going, now you want to look for a specific market structure. So this rules-based approach, we need to consider two things. Number one, we need to consider which direction that the trend is going. And number two, we need to consider the actual market structure. And what do I mean by market structure? Let me go ahead and draw this out so I can explain it to you. So let's assume, just for example, that the trend is going in the up direction, and we kind of realize that based off of like fundamental analysis, right? So the trend we realize is going in the up direction. We might see something like highs that are getting higher and lows that are getting higher as well. So you might potentially see something like this. And if you see something like this, you want to look for a place of an extreme relative high. So a couple places of extreme relative highs are this area right here is a relative high. And what do I mean? What I mean is looking at the actual area where it creates the highest point, or in other words, a peak. You want to look towards the left side of it, and you want to see is their price currently at this same level or higher? If not, if the price is not at the same level to the left of it or higher, this would be the most relative recent high. So you would want to kind of focus on, and you would want to draw what's called a support and resistance area, or in other words, a key level in this zone. Now, as soon as you see another relative extreme high, for example, this is now a relative extreme high. Why? Because there's no other price action that's near this area or above it in the relative near term. So then this would become your next relative extreme high. So what would you want to do here? You would want to go ahead and create another what's called a key level, or in other words, another support and resistance area at this spot right here. And you would want to extend this zone into the future. You want to extend it all the way to where the price hasn't reached yet at all. And by the way, same thing with this one. You would want to extend this to the future because we're looking for an area that the price might react. So once you have your zones created, let me kind of explain how you will use this to your advantage. Now, let's go ahead and focus on the most recent extreme relative high for this example. So let's focus on this area right over here. So this is the brand new zone that we've created. So what could potentially happen in this area is we see the price has rejected, or in other words, created a peak right here, and it started moving away from it. So what could potentially happen if this is where the current price is right now? The price could potentially continue to go all the way down. And if it does, then we have no potential entry. However, if the price does approach this area again, there are a few things that could happen here. So what could happen here is the price could just as well bounce off of this top area again. And if it does bounce off this area again, then we don't have any trade in this scenario either. When we do have a trade is if this next scenario happens. If the price pierces this extreme relative high over here, if the price pierces it, now we should be looking for a potential area to take a trade. And which direction should we be trading? We should be looking to trade in the up direction, going long or looking for buys. Why should we be looking for buys? It's because we can notice that the actual trend itself is going in the up direction, and we want to follow the direction the actual trend is going. So what might happen here? So let me kind of explain how this rules-based approach works. So if you see the price somewhere up here, we would want to patiently wait until the price came back down to the same level, to the same area. And if the price does come back down here, we would be looking to place a entry to go long, to go in the up direction, because what will happen more often than not, the price will approach this area and continue to go back up, just like we showed in this example here, that the price, we looked at these highs over here, we created our zone, and what ended up happening, the price pierced that high and went back down and retested the same zone after it broke through it. It retested it for the continuation to go long. This is why this is called a trend continuation strategy. Now, will the price action always bounce off of this to go in the up direction? Absolutely not. The price could sometimes definitely go down as well, but more often than not, the price will respect the zone and continue to bounce off of it. And this technique, this strategy works in bigger time frames. What do I mean by this? When you're looking at a specific time frame, this works in the weekly time frame, the daily time frame, the 4-hour time frame, and the 1-hour time frame. Just know the smaller time frame you get, the less and less this strategy would work. So if you're looking at like the 15-minute time frame or 5-minute time frame, or even a 1-minute time frame, this strategy isn't gonna work too well. You need to be patient when it comes to this strategy, because once you do follow this strategy properly, this can make you a ton of money. So how could you tell if you weren't looking at fundamentals? How could you tell and determine which direction that the trend might be going? Here's a quick little hint. When you're looking at a trend, you want to look at a place of a relative high, and you want to look for another peak if the next peak is getting higher than the previous one, that would show a potential sign that the price is getting higher. You also want to look at the same thing for the valleys, or in other words, the lows. So if the lows are getting higher as well, that would also give you another sign that the trend is potentially going in the up direction. So as long as the lows are getting higher and higher and higher, that shows you that the trend is going upwards. Or in other words, if you see the highs are getting higher and higher and higher and higher, that shows you the trend is going in the up direction. So look for those things whenever you're looking at candlesticks when it comes to looking at the actual charts themselves. So now that you have the basic understanding, basic idea of number one, looking at which direction the trend is going, and number two, finding out where you should exactly enter, in other words, the break and retest of the previous highs. Now let's go ahead and show you examples on the actual chart to see if this strategy could give you a positive expectancy. Now this strategy can work whether the market is going in the up direction, or in other words an uptrend, or in the down direction going in a downtrend. So this example that I'm going to give you here is an example of the market going in the downtrend. You can see we're currently on Euro AUD. This is currently trending in the down direction. Now, again, if you didn't have fundamental understandings, you can still kind of determine which direction the trend is going just by looking at the highs and the lows, right? So in this case, you'll notice that here's a relative high. Right here in this area is a relative high, and the next high that you see is getting lower. So this high and the next high that you see, it's getting lower. So that gives you a signal that this is potentially going in the down direction, a downtrend, right? So now you will look at where the lows are. So let's go ahead and look at this relative extreme low. And one thing you guys have to pay attention to, understand that if you are going in the down direction, if the trend is going downwards, you want to be focusing on and looking at your relative lows. These are the areas that are areas of interest. So we're looking at the tops to understand where the trend is going, but we're looking at the bottoms to find any potential areas to enter the actual trades. So what area is of interest to us? It's this low right here. So when we see a relative low, what do we want to do? We want to instantly understand in our mind that we should automatically create a zone of interest, or in other words, a support and resistance area, and we need to extend it into the future. So I want you guys to follow along what I'm explaining here. So first thing we kind of noticed, we noticed the price went down, created a low, the price went up, and as soon as we see the price going up, what we want to do is we want to go ahead and create our zone instantly when we see a low has created. So when we see this low has created, what we are looking for the price to potentially pierce through our zone. And then once the price has pierced it, if it has, then we're looking for the price to potentially reach back up. And if the price does happen to reach back up to the same level, that's when we are going to enter our trade going short, going in the down direction. And we are only going to enter if the price does end up approaching right back at this zone. That's why, number one, the strategy requires, number one, patience, and number two, discipline. Why? Because if the price does pierce below it, and if the price ends up coming back up here and then continue straight down, I do not want you guys to go ahead and chase the trade and enter way down over here. We're only entering if the price does end up touching this same exact level. This is why you have to be patient and have to have discipline when it comes to the strategy. So let's go ahead and allow the candle to kind of play. Okay, at this point right here, this candle is when the price has actually truly pierced our zone. This is at a point where now, again, we're looking at the 4-hour chart, meaning each candle, time is passing by 4 hours. So at this point, we need to potentially wait. We're just literally waiting either sitting at the charts or we have set an alert on TradingView to alert us if and when the price does end up going back up there, if it even does. Price doesn't have to go up there. So we continue to wait. We continue to wait. We continue to wait. Again, this is 4, 8, 12, 16 hours have passed, and we're literally just being patient. We're not moving. We're not doing anything. We're just being patient. Okay, price has finally reached our area. Now, this is at a point where we would enter our trade going short, going in what's called the down direction. So we put our stop loss above the area, above the zone, and you could put your stop loss or your take profit where you want to close your trade, many different areas, but in this case, let's just say a simple area to kind of take profit is exactly at the previous low structure right over here. And what I would do is I would actually take profit a little bit above that area just to kind of be safe. So remember, what do we look for? We look for relative lows, and we create a zone going in towards all the way to the future. What do we kind of see here? Same thing. We saw another low, so we need to instantly tell ourselves in our mind that we must always create this low, create this zone to look for another potential short. So as we go ahead and hit play, okay, we'll notice the trade went and hit take profit. Now, what are we doing here? We're waiting patiently for our next trade. This trade's success. Now we're waiting for the next trade, and we're waiting for the price to potentially do the same exact thing, pierce below, potentially retest, and if the price does pierce below and retest it, we're looking to go short in the down direction, the same way that the actual trend is going. So let's go ahead and delete this little tool here, and we'll see how this trade continues. I don't know if this is going to work. I don't know what the positive expectancy is for this chart, but we're going to go ahead and find out together. So let's just go ahead and continue to hit play. Okay, price clearly broke through it. Now we're waiting for the potential retest. We're waiting for the price to potentially go back up and approach this area. If it does, then we're looking to go short. And if it doesn't reach it, then it's no trade. We just set it out. Okay, so the price reached it. But in this case, had you taken the trade, this trade would have potentially stopped you out. This trade went 60 pips against you. So this trade potentially would have been a loss had you taken this trade. So what do we see here? We see another extreme low. So what are we always supposed to do when we see extreme low? Go ahead and draw another zone based off that low. So I'm going to get out of this replay tool just to kind of make it a little bit faster. I just kind of wanted to show you step by step how you would be doing this. Now, let me just get out of the replay tool so we can just kind of quickly move through it a little bit faster. Okay. So this right here was the next recent low that we had created. So we're looking to enter a short off of this zone. So we're waiting for the price to break through this zone, and if it does, then we're looking to short. So we're waiting, we're patiently waiting. We have our zone created. We're patiently waiting. The price still has not pierced through that zone, so we're continuing to wait. Here it finally pierced through the zone. Now we're looking to enter a short. Now we have our signal to potentially look for potential area to go short. So we will patiently wait until the price reaches back up. And if it does, then we enter our short. So did this trade win? Yes, this trade went directly into take profit. So now just to kind of speed things up, let's go ahead and just quickly draw all the zones, all the relative extreme lows. Since we're looking at specific lows, let's go ahead and draw out all the specific extreme lows just to make this a little bit faster, right? So in this case, I'm not skipping any, because if you're backtesting and looking at previous historical data, you have to make sure that you do not cherry pick specific areas to enter. You want to make sure that you always follow the rules, just like you're going to be doing in real life. So what I'm literally doing, I'm looking at every single low that's been created, any extreme low, and I'm marking that low. So this way we're not skipping any. We're looking at every single real life example that we would possibly look at. Okay, so now that we have all the lows marked up, let's go ahead and draw our zone so we can kind of see whether or not these trades were profitable. So looking at this low here, this trade would have been profitable if you entered the trade here or here. Let me go ahead and mark this down. This trade would have been profitable if you entered the trade here, or if you missed it on this trade, on this entry, it would have been profitable here, or if you missed it on this entry, you would have had another chance to enter this same trade here. So this trade would have worked out as well. So let me go ahead and use this little brush tool to mark all the ones that did work and all the ones that didn't work. This trade worked. This trade we would have entered here. This one would have went straight to stop loss. This trade would not have worked. This trade did work. This trade worked 3 times depending on where you entered. So this trade did work. Looking at this trade, as you draw your zone here, you would look at if it did what's called a clear break and retest. You'll notice as the price pierced, so looking at this area right here, is this considered a clear break? This is not considered a clear break because the price went below it and then it went right back up. It didn't have any breathing room under it. Same thing here. The price went down and it went straight back up. This also would not have been a clear break. Now looking at this one here, this one did create an actual clear break. So this one would be considered the clear break. Now, as it had all these false breaks, this low would not be valid anymore. And you would consider this next low as the next low to look at to consider a potential short. So this one here would be no trade. This one here, now we're looking for the price to potentially pierce below it. And if it does do a clear break and retest of this area, then we're looking to potentially go short. So we would continue this until we see the price breaching below it. The price still hasn't breached below it, so we would continue to stretch it all the way until the price breaches it. Where here it finally did breach it and it did a clear break. The price is clearly below it. Now we would be looking for a potential area to go short if the price retests it. It might work and it might not. I'm not sure. So as we continue it here, we notice the price did do a clear break and it did do a clear retest and it did continue to go short. So this trade would have been a winner as well. So let me go ahead and mark a check mark next to that one. So now what's our next extreme low? Next extreme low, we'll consider this our next extreme low. The price did kind of go pierce through it. So let's go ahead and mark this as a low. And let's go ahead and draw our rectangle. And we'll notice, was this a clear break? It broke straight through it and then it went right back up. There was no gap in between. There was no space like this little area right here. So this would not be considered a clear break because it didn't have a clear area of it breathing and allowing it to kind of go back and retest that area. So this zone would be invalid. So now we're looking at an area that is a clear next relative low. This would be considered the next relative low. So now we draw our zone in the same spot, continue it all the way right. The price did not pierce it, so we would continue to wait and stretch this out in the future. So we would continue to wait. And we notice here the price did indeed do a clear break. And now it's waiting to kind of retest that same area here. And once it did clearly retest it, the price respected it and continued to go short. So this was also a correct winning trade as well. So now let's look at this next previous extreme low. We draw our horizontal zone, we draw our support and resistance area, we draw our little key level, and once we see the price did a clear break, right here you see the price clearly broke through it and it created a gap, or in other words some breathing room. This would be considered a clear break and the price went back up to retest it. This would also be a winning trade as well. So let's go ahead and put a check mark there. So this next one here, this is our next relative low, and we see the price. You could argue that the price did do a clear break here, So if you had taken this trade, this one would have been a loss. So let's go ahead and just put an X on that one. And our next relative low would be right down here as well. So we mark that zone and we wait for the break. If you would have taken your trade based off this break and retest, that would have been a winning trade. But personally, I do not see this as a clear break and retest. I see this as a clear break. This would be considered a clear break. And the price went all the way back up to retest it. This is where your entry would be. And this trade would have netted you, entering here, this trade would have netted you 75 pips profit. So this trade would have been a winning trade as well. So let's go ahead and put a check mark next to that one. So now we're looking at the next low. So now we go ahead and mark that same zone, the next relative low, and we want to extend this all the way into the future until we see the price actually pierce through that zone itself, which it finally ended up piercing right here. So as the price pierces this zone here, we would wait to enter our short. So if you consider this a clear break, you would have entered here on the way down. If you don't consider this a clear break and you consider this a clear break, you would have entered here on this wick and you would have entered the short right down there. So this would have been a winning trade as well. So now we're looking at the next extreme low, which is right down here. So we would obviously do the same exact thing, and we would wait for the price to pierce, which it did end up piercing here. We would wait for the price to continue to go back up. This would have been a losing trade. So we would mark an X on that one. And this next one here, as you continue to go down, you notice it went below and it went right back up. This isn't a clear break and retest, so we would wait for the price to continue to go back down. This one here would also, I consider, a failed trade as well. So now we're looking at the next extreme low, which is here, and we would extend this all the way into the future. And this trade, we're still waiting for the price to actually approach it. And if the price does end up piercing it, what are we looking to do? We're looking to enter a potential short to go in the down direction. So now let's kind of review and kind of see how many trades we would have won and how many trades we would have lost in this scenario. So how many trades did we take? We've taken 1, 2, 3, 4. We did not take this trade. 5. Did not take this trade. 6, 7, 8, 9, 10, 11, 12. We've taken 12 trades in this whole scenario. And how many have we won? 1, 2, 3, 4, 5, 6, 7, 8. We've won 8 trades out of the 12 trades that we've taken. So you take 8 divided by 12. This would have given you a 66% win ratio just based off the trend continuation strategy. So the question is, if you're winning 66% of your trades, how many are you losing? You're losing 34%. So 66 minus 34, you have a 32% edge when it comes to these markets. If you haven't seen the casino video that I've uploaded on this channel, I would encourage you to watch that video, because the casinos, as you'll notice, they have a 5% edge in the markets, and they continue to make millions and millions and millions and millions of dollars with trading with this simple strategy. Just looking at one small thing, you're able to give yourself a 32% edge when it comes to this strategy. Just by doing this, you can literally continue to print money as long as you follow these rules. And one thing I do want to let you know is that this strategy does require patience, because I want you to look at one thing. We drew this zone right here. We drew this zone starting from here. And I want you to look at these little numbers that are appearing. It'll tell you how long time has elapsed as I kind of drag this around. So I want you to kind of follow this and kind of see from our beginning entry of where we kind of looked at where the trade might bounce off of, all the way to where we entered the trade. This was 34 days of literally being patient and waiting. Sometimes the trades come a lot faster. Sometimes the trades come within 7 days. Sometimes the trades come within 3 days. You see, looking at 3 days wait, 7 days wait, 34 days wait. Some trades come within 18 days. This trade we waited how long? We waited 7 days. This trade we waited 4 days and it failed. And then this trade, we waited 8 days. And this trade here, we waited how long? We waited quite a bit. We waited 34 days for the trade to come. So as long as you have patience with any strategy, you're able to give yourself an edge when it comes to the markets. And this is just one currency pair. Look at any currency pair. I want you guys to go and test this yourself. But when you do test this yourself, I want you guys to be genuine with yourself and actually look at every single option that where you would have entered that trade in real life, and I want you to mark that down, tally it whether you would have gotten it right or whether you would have gotten it wrong. That's called back testing. And personally, I'm not too much of a fan of back testing because people have a psychological bias to kind of avoid marking the ones that you might have got wrong. You might have like kind of convinced yourself and say, I don't think I would have entered that trade. But in reality, you might actually have. What I do encourage is doing what I call live testing. It's testing this stuff and doing it in the real life markets and just waiting for the price to actually do it in real life and just being patient with it, doing it on a demo account and just practicing, right? So you can practice using back testing, but I would prefer doing it in live testing, looking at various different currency pairs and doing it in real life, because this way you'll know how your emotions will come in play, how your patience will come in play, and how you will kind of react when it comes to this type of discipline. So for those of you who've made it this far into the video, I want to reward you guys. I want to drop a huge value bomb for you. So if you've made it this far, I know we just got done talking about patience, so I want you to go down to the comment section below and go ahead right now, write the word patience in a comment. Now, talking about a golden nugget is, we're looking at right now at this strategy that gives roughly like a 66 or 70% win rate. But let's say you want to supercharge the strategy. How do you dramatically increase the win rate? How you do this, you add other things to your strategy, you build upon it to give yourself a higher chance of success when it comes to the winning trades. So let me kind of explain what I mean. I know in the previous video, we talked about fundamental analysis, being able to understand what's happening in the news to determine which direction we should be trading. So looking at these trades, looking at what's happening here, you could generally look at, and just by looking at it, you can understand that there was some fundamentally driven news in this time frame from here all the way to up here. For a move to be made that big that quickly, such a dramatic move, there obviously has had to been a dramatic news or something going on in the economy, whether it's euro or AUD. So in this case, if you're paying attention to fundamentals, this trade might not have been a loss for you. This trade might have just been a missed trade that you would have potentially sat out because you would have saw that there's some fundamental economic news that came out that you would have completely sat this trade out to allow yourself to not eat this loss. So the golden tip I can give you is, number one, use fundamental analysis to sit trades out to avoid getting into potential trades that you might have lost. This also will help you dramatically increase your win rate, because instead of losing this trade, this would have just been a trade that you kind of missed. So instead of taking 12 trades, you would have had 8 trades out of 11 trades that you've taken, giving you a 72% win rate, dramatically increasing it from 66%. And if you would have sat this trade out, that would have also allowed you to save another potential losing trade. So that's one tip. Another tip is, if you also want to dramatically increase your win rate, another thing you can employ is these candlestick confirmations. And I've talked about that in another video previously on this channel as well. So if you haven't watched that video, go ahead and watch it. I'll link it right above my head over here. You can watch that video, because if you take that into consideration, if you wait for candlestick confirmations, that'll also allow you to avoid any trades that you might have missed. Because if you look at this trade that you would have potentially got wrong, you would have seen that this was a very bullish candle, so you probably wouldn't have even entered here. This will allow you to avoid having this missed trade here. So instead of taking 11 trades, you could have taken 10. So 8 trades out of 10 trades, netting yourself an even higher win ratio, winning 80% of your trades here. So being able to kind of use various other things that I've showed you already in the past few videos that I've made it will dramatically help you increase your win rate. And by the way, I've released tons of other valuable things that'll allow you to increase your win rate, you're just going to have to go on a scavenger hunt within my videos and look at them. I've dropped so many golden nuggets here and there. You're just going to have to find all the different value bombs that I've dropped, because adding all these small things together step by step, that is how you create yourself a very profitable strategy. So I hope this video was very valuable for you guys. I've given you countless examples. I've shared with you how you can potentially increase your win rate just by using this as a very basic starting off format to create yourself a strategy. This will help you determine and understand, number one, how to practice patience, how to practice discipline to give yourself an edge when it comes to the market. So that is all, folks. I'll catch you guys in the next video. Take care, guys.